Hey, rich friends, it's your girl Chacha, reporting live from the Money Mantra. We are back with another Forex education video. The purpose of this channel is to help as many people as possible become independent and profitable traders. So, if that's something that you're interested in, you're going to want to make sure that you subscribe to the channel. If you get to the end of this video and you learn something, make sure you like this video, leave a comment, and more importantly, share it with somebody else who you thinks that it could help. So in today's quick video, I'm going to be doing a trade breakdown of this NZDUSD trade that I dropped in the group chat for my rich friends on July 10th, 2003, which we can see from this timestamp here on the trading view. So I dropped this trade in the chat and I suggested that they sell or set a sell limit at 0.6220 or higher. I also set a stop loss of 40 pips. I set a TP1 of 40 pips given a 1-to-1 risk to reward ratio. I also set a TP2 of a 1.5, 1 to 1.5 risk to reward ratio, and a TP3 at a 1-to-2 risk to reward ratio. Now, this trade did have a lot of signals for a sell, which is why I decided to take it for that way. As we can see, we had one of my students made money. She posted this screenshot in the chat. And here was the update that I posted into the chat this morning once the trade had actually hit 40 pips. So I'm going to be going over to TradingView and breaking down why I decided to take this trade and how the trade actually went in our favor. Now, there are two types of traders that you can be. I highly recommend that you watch my video, Trend or Reversal Trader, so you can figure out what type of confirmations you should be looking for based on the trading style that you're comfortable with. Now, trading with the trend is nice, but sometimes when you predict that a reversal is imminent, you can look for those indicators as well. Now, typically when I'm using this strategy, if I'm looking for a sell, I would want for my candles to be below my EMA, letting me know that the trend is down. But once I start to see that there is some liquidity or rejections happening way above the EMA, for me, that is going to let me know that the market is signaling for a reversal. So when I was analyzing the market, I started analyzing here. So it was around Monday at 7 o'clock p.m. And I did have the rejections I was looking for at the top, which we can see. I can circle this. I had some rejections at the top, which we can see right here. So that was my first confirmation for a sell. The second thing that I was looking for was for my momentum line to be facing, excuse me, for my momentum line to be facing down and preferably below this dotted line, which would signal that the selling trend had already started. But because I was looking for a reversal, I knew it was going to take some time to develop, but it facing down gave me enough reassurance to want to get into the trade. The second thing was also my stochastic was facing down, and I like to look for my orange line to be above my blue line, as we can see here, if I'm going to take the trade for itself. Now, because I did set a pending order, the trade actually triggered here, which we can see was my entry point that I dropped in the chat 0.6220. You would have taken the trade here if you would have gotten that market execution. So we had some more rejections, right? We had some more rejections over here. Then we also had this candle, which, well, really this candle, which broke structure on the downside, meaning that the market was doing a very predictable thing like that up until this point, where this candle broke out of that structure and confirmed that the bears were in control and the market was going to sell. Again, I also had my momentum line facing down, letting me know that the market was going down. My stochastic was also facing down, letting me know that the market was going down and the orange was over the blue. Not only that, I had my entry signal of what I like to call the cross down. And pretty much anytime you see an indicator crossing above or below these dotted lines or any lines, that's going to be your entry to go ahead and enter the trade. So we had the cross down back below the 80% line, because when price is above this dotted line, it's overbought, which means that it's inevitable that it sells. And when price is below this line, that means it's oversold. and it means that it's inevitable that it's going to buy. So we had our 1, 2, 3, 4 confirmations to go ahead and take this trade, which is why I did decide to get in. The trade did hit my TP1, and it's approaching TP2, which is around 0.61600. So about 20 more pips. Actually somewhere around here. If the market gets back down there, I won't make a second video, but you guys can follow along with this trade to see what's going on, and if the market will continue to sell. But I do think it's going to continue to sell. If we check this out on the 4-hour, again, we have a break of structure here. We can see that our momentum line is not facing down, but it actually has crossed below the 0 line. Our stochastic is still showing some pretty strong momentum. The orange is still above the blue. So I am expecting this trade to continue to sell. And it may even hit my TP3. So I really hope that this was helpful. If it was, make sure you give it a thumbs up, leave a comment, let me know what you learned. But more importantly, share this video with someone else. That's all I have for you guys today. Until next time, rich friends.